Hey, are you ready to dive into Berger Paints' latest earnings report? It looks like they've been quite busy.
Absolutely. Berger Paints, right? They are one of the big players in the Indian paint industry. I mean, they offer everything from decorative paints to protective coatings, and they've got a pretty solid market presence with various subsidiaries and joint ventures. I think they even inaugurated a new corporate office recently.
Yeah, they did. They inaugurated a new corporate office on February 10th, 2025. So, what are the key takeaways from their financial performance?
Well, for the standalone Q3 FY25, they saw a high single digit volume growth in their decorative segment, and their protective business did really well. Although the volume value gap was impacted by product price decreases and stronger sales of high volume, low value products.
That volume value gap is interesting. So, even though they sold more, the revenue didn't increase at the same rate?
Exactly. It seems like their exterior premium segment performed well, along with waterproofing and construction chemicals, which had strong double digit growth. Their industrial business, however, experienced muted growth.
Got it. How did that translate to the numbers? Can you give me some figures?
Sure, their standalone total income from operations for Q3 FY25 was 2,584.76 crore rupees, which is a slight increase from 2,574.20 crore rupees in Q3 FY24. However, the PBDIT excluding other income decreased from 429.58 crore rupees to 417.49 crore rupees. The PAT increased, though, from 263.25 crore rupees to 306.08 crore rupees. That's a pretty good jump, actually.
Okay, so mixed results then. How about the YTD numbers? Did they follow the same trend?
Kind of. The YTD December FY25 standalone total income from operations was 7,821.77 crore rupees, slightly up from 7,753.79 crore rupees. The PBDIT excluding other income decreased from 1,346.53 crore rupees to 1,284.63 crore rupees. The PAT showed a slight increase from 833.46 crore rupees to 840.58 crore rupees.
Right. I guess that gives us a clearer picture. So the operating margin was lower year on year, but improved sequentially. What were the reasons for that?
The gross margin contracted slightly due to product price reductions, currency depreciation, and some inventory impact from monomer price increases. But they managed to improve operating margin sequentially through operating leverage.
Makes sense. Were there any significant positives to note?
Definitely. They improved their net cash position, and their overseas subsidiary BJN Nepal had a robust turnaround performance. Plus, their joint venture, Berger Nippon Paint Automotive Coatings, showed strong top-line growth and improved profitability.
It's good to hear. What about the consolidated results? How did the group perform overall?
On a consolidated basis, the Q3 FY25 total income from operations increased to 2,975.06 crore rupees from 2,881.83 crore rupees. However, the PBDIT excluding other income decreased slightly from 480.04 crore rupees to 471.73 crore rupees. And the PAT decreased a bit from 300.16 crore rupees to 295.97 crore rupees.
So the consolidated numbers are a bit softer than the standalone figures. What about the YTD consolidated results?
For YTD December FY25, the consolidated total income from operations increased to 8,840.68 crore rupees from 8,678.64 crore rupees. But again, the PBDIT excluding other income decreased from 1,510.44 crore rupees to 1,428.32 crore rupees, and the PAT also decreased from 947.20 crore rupees to 919.90 crore rupees.
Okay, so a consistent trend of revenue increase but profit squeeze at the consolidated level. What's causing that?
Well, it seems like their overseas subsidiary, Bolix SA in Poland, had steady to profitable growth, but profitability was muted due to one-off project expenses. Also, STP Ltd suffered in profitability due to a deterioration in product mix.
That's a bummer. So What's their outlook for the future? Are they expecting things to improve?
They seem optimistic. They're expecting the decorative business to improve sequentially, fueled by favorable budget announcements and adequate monsoon. They also anticipate the volume value gap to bridge as the impact of price decreases diminishes.
Okay, so they're banking on external factors and a bit of normalization. What about the protective and industrial businesses?
They expect protective business prospects to improve due to government spending on infrastructure, and they anticipate better performance from automotive and other industrial businesses in the coming quarters. However, they're wary of geopolitics and currency depreciation.
Right, those are definitely wild cards. Overall, what would you say is your assessment of Berger Paints' financial health and outlook?
Well, despite some challenges with profitability in certain segments and subsidiaries, Berger Paints has shown resilience with volume growth and a strong market position. They're proactively addressing the volume value gap and focusing on high growth areas.
Sounds like a mixed bag, but with potential for improvement. Anything else that stood out to you?
Actually, their aggressive network expansion is pretty impressive. They've added over 2,000 retail touchpoints and installed around 1,800 color bank tinting machines. That shows they're really investing in growth.
That's a great point. It seems like they're setting the stage for future growth, even if the present is a bit challenging. So, final thoughts?
Berger Paints is navigating a complex environment with rising costs and muted consumer sentiment, but they're doing a decent job maintaining their market share and positioning themselves for future growth. I mean, it's a company to watch, Disclaimer, we advise investors to check with certified experts before taking any investment decisions.
So, that was really insightful. Thanks for breaking that down for me. Hey, if you're enjoying these kinds of financial breakdowns, don't forget to like, share, and subscribe to our YouTube channel for more content.